Welcome to Powerful Women Today Live. We are going to speak about your business being lender ready. At any given point, we all need money to just level up. And we are pleased to have today with us our mentor expert, Rosanna Lamanna, and we are going to get right to it.
Empowering women on a global scale. Welcome to Powerful Women Today with Carolina Billings. Powerful Women Today is on a mission of inclusion, rewriting his story to include her story, and empowering, raising, and amplifying women's voices with professional speaking, publishing, original podcasting, and web TV. And now here's your host, the founder of Powerful Women Today, Carolina Billings.
Welcome, everyone, to another Money Wednesday. It's always great when we speak about money, how to make more of it, how to leverage it, how to grow it, and how to put it to good use. So welcome, Rosanna. It's always a pleasure to see you.
Thank you. Good afternoon, Carolina. Great to see you too.
Yes, we're going to speak about one of our favorite topics, which is getting your house in order.
Yeah,
and that is definitely part of getting yourself lender ready. And I know borrowing money is a great source of anxiety. I mean, nobody wants to be in debt, right? But when you're growing a business, starting a business, or really just trying to level up, right? There are going to come times when you need to get that cash infusion in order to get you to your goals and get you to the next level. So today we are welcoming, of course, Rosanna Lamanna, CPA partner at Fuller Landau, who is one of the best people I know to give you advice as to getting your house in order and getting you lender ready. So let's talk about what are the different types of funding and in places that people can go to, and how to determine where is the best place to go for what they need you have.
Yeah, no, it's a great question. Often there, like you said, there is a lot of anxiety about getting or borrowing money and obtaining financing. I'm going to say for the most part, when companies are just starting off, a lot of it is what I'm going to call bootstrapping, going into your personal piggy bank and pulling out, every dollar you have and investing in your business, going to friends and family and trying to see if anyone's willing to sort of lend you some money to help you sort of get up and running. In other cases, once you start establishing a bit of your business and, you may start looking to lenders. Sometimes, you'll see like the BDC, for example, they're very friendly to entrepreneurs and helping them get started. And that's often one place that people tend to go to sort of get their foot off the ground. And then there's, your typical financial institutions. And especially if you've held some personal funds at some of them, you might have established some relationships there and perhaps can share your story about your business and your growth plans with them. And there might be some opportunities to get some lending through a financial institution. I mean, there's a whole other group of financing sources,
Lender.
angels.
These are your most favorable.
Yeah,
these are your most favorable. So I want to touch on a couple of points that you just made. And they're actually more important than you realize. So your seed capital coming from friends and family. A lot of people want to know how you were able to raise your seed capital because it determines a lot of things. It determines that you have proof of concept. It determines that, there's people that believe in what you're doing and that you have the initiative and the fortitude to go in and go get it, like go raise some capital. And then you mentioned the BDC, which is Business Development Bank for our international friends and listeners. And there's one like it pretty much in every country. There's some commerce and development, whether it's a credit union or some kind of government institution that is more favorable to entrepreneurs. And what Rosanna just said is important that you already have a lending partner or a banking partner, right? So sometimes it's just visiting the other side of the bank where the business and commerce takes place, opposite to the personal banking. So establishing a relationship with somebody in your bank is very important because that someone can be your champion inside the bank to to give a reference, to showcase that they've known you, that they've done business with you for X number of years, instead of just going cold right into a bank and trying to get money, especially if you're starting up. So let's talk about the next thing. So now you decided that you're ready for the next infusion of growth, whether it's you now just got a big order, or you're now like formally taking it to the next level, or you're expanding or growing, right? So is there a specific legal structure that people need to have for that?
For borrowing money, I'm not sure so much for borrowing money. For borrowing money, it's sort of the business case and what they have. To be quite honest, though, a lot of businesses tend to incorporate for legal reasons. There's lots of benefits to incorporation for a business owner themselves. And sometimes there's also some planning strategies, risk management, creditor proofing type things that people think about when they get into legal structures. So I'm going to say most people tend to incorporate a business. Once they start getting going. And as part of that incorporation process, it's, what type of business am I in? What business am I in? How am I going to grow this business? Who are my customers, my suppliers? What does the industry look like? What does the market outlook for this industry look like? Those are all things that people need to prepare for when they're going to go speak to a lender. It doesn't matter who it is.
You could still do it as a solopreneur. And I think the main difference is that if I understand it correctly, is that when you incorporate, the corporation has its own identity. It's its own entity. So when you're going to a borrower, to a lender, when you're a borrower and going to a lender, and it's in the name of your organization, it's the organization that has to prove its worthiness. It's still backed by you, but primarily they're going to look at the business. If you're a solopreneur and you're borrowing money as an individual to grow your business, then it's all on you. And you had mentioned when we were warming up that there's a specific criteria, that a simplified criteria that lenders look for, whether it's personal or business. It's something about 4 C's, I believe you said.
Yeah, so I was just kind of mentioning a lot of times when when you're going out to a lender, they do sort of consider the 4 C's of lending. And, the first one sort of being character. So it's sort of the management team. You're a business like solopreneur, it's yourself, whoever the business owner is, the entrepreneur, what's their credit worthiness look like? Have you developed good credit over the years? Or if you're in a management team and this is maybe even your second or third business that you start opening, what's your track record been? What do you like to deal with? So it's just kind of understanding the person that they're actually lending money to, and their ability to repay the funds. Other things that they look at too is just sort of the capacity. So when they look at capacity, being the second C, is more about, how able are you to sort of repay the debt? Can you manage the debt load relative to either the equity invested or your personal income that you generate each month to help support the debt repayment process? So that's going to be super important. Then the third C is collateral. So if you're lending against assets, then typically those assets become the security for the loan. So there's some support there, or at least some peace of mind for the lender to know, well, if I don't get my money back, I'll sell the assets and get my money back that way. So that's sort of another one that people that lenders do think about and look for. And then also capital. So how much money does a lender need? How much do they have in personal funding or within their business to be able to repay the loan? So those are all sort of things they look at. In some cases, sometimes you hear of even just conditions.
Now,
so
there's
Oh, are we breaking up?
Yeah, that's okay. Let me fill in. That's all right. We're broadcasting live. This is just what happens. The show goes on. So I want to touch on a couple of things that you just said, right? One of them being collateral. And know that when it comes to collateral, you're going to hear terminology like a PPSA or a PIMC, or they're putting specific ownership. They're taking temporary ownership of whether it be inventory or your accounts receivable or your building, like any other kind of collateral to secure the loan. Those are secured lenders. And you got to be very careful what you agree or when you agree to give someone security. Because it almost falls that if you give one person security, then everybody wants security, right? Because then nobody wants to be an unsecured lender. But traditionally, banks in the government, for example, if you're working with an organization like BDC, in banks will want some kind of security. They always take some kind of primary positioning when it comes to all of your other lenders, right? Like your government will come, your payroll, for example, will come ahead as a secured lender or a secured, organization ahead of banks, and then banks ahead of everyone else. So there's a hierarchy of who's going to get repaid, if something were not to go right. And another thing that you said is, the servicing ratio. How much can you borrow? Right? So that becomes, and that's another terminology that you'll hear, is a servicing ratio. And usually banking institutions, if you're going to go with traditional banking, they want to know, you need to explain why you want the money that you want, what you're going to use it for. Because if your business, say, for example, is only making, or is just at the beginning stages and is making $100,000, and you're going to the bank asking for a $250,000 loan, right? Then you're not making enough money at the bottom to service that loan, right? To pay back for that loan, unless you have an extenuating plan in, proof of concept, and you know exactly what you're doing. And then there's certain times that a bank will consider expansion loans, or they will work with you and go, okay, maybe we won't give you the $250,000 all at once, and we'll work it into phases and work with you. Right? I found, the visit that I had with the bank, which the last time that I went to a bank to look into expanding, I love that they offer holistic banking, which I'm still to this day love it. I think it's just a great terminology. And what I loved about it is that they really took a look at the whole picture of it. And they said, okay, you know what? This is what you're going to need to get you to this point. This is what you're going to need to get you to this point. And here's how we're going to help you right now. Right. And we're going to get, so it's not just filling out an application and saying, I need a loan, right? It's really a conversation. And it's a conversation that you should have already had with your financial advisor before you go to the bank. So you are better prepared for the answers to the questions that they will ask, and improve your chances of getting funded for that project that you're working on. Another point that I came across in preparing for our show is the use of business bank accounts. Do you have to, I guess if you're a corporation, you have to have business bank accounts, but if you're a solopreneur, do you have to have a business bank account in order?
Not everyone does, but I'll be quite honest, and maybe it's the accountant in me coming out. It's always best to separate your business from personal. It just makes sort of the year-end accounting nightmare go away if everything's separated, because we can't mix our personal expenses with our business expenses. So having a separate business account where all the transactions flow just makes life easier for everybody.
Yeah, and I guess it would also tell the lender that, it's not a shoebox of receipts that you're keeping and, hoping that you're going to split it all up at the end.
Yeah, it does. And it provides some legitimacy to your company too, right? Like you're really trying, you're opening up a business bank account, you're transacting, you're looking to grow, you're managing your money. I think it's just very important that you even start somewhere to start building up your business and doing all the right things from the get-go.
And you never know what's going to happen, because even now with the pandemic, right? There were all of those government initiatives, and then all of a sudden the requirement was that you had to have a business bank account for your business, and it had to have already been in place by the time all this came, right? So it caught, actually, if anything, I think the current pandemic has created a lot of good good habits to get into, and putting a lot more structure to businesses, so that you're ready to level up, right? And lending is like, when you think you need money for your business, it's not always because it's of bad management. Like
Oh,
sometimes it could be, a super large like purchase order that you cannot accommodate within your cash flow facilities. And you all of a sudden you have this incredible windfall, and somebody wants to buy $1 million worth of goods and services, and you just don't have the manpower, or you don't have all the raw material or the credit lines to fund it. You can go to a lender and say, can you please fund this one transaction for me? Work with
absolutely.
me. Yeah.
Absolutely. So you can do that. And sometimes it's even just seasonality of your business. There's going to be peaks and
Yeah.
valleys throughout the year, and you're going to need some financing at some point. I always say
Mhm.
be prepared, have conversations with your lender even before you need the money. Let them know what's going on in your business, help them understand your industry, your challenges, your opportunities, because when you do actually need the money, it just makes that conversation so much easier because they get to know you, right? Like not all lenders are created equal, not all lenders are familiar with your industry. And so
Even
a little,
branches within the same lending institution
right,
will sometimes have a different interpret the information differently, right?
exactly.
And yeah,
Yeah.
interesting.
Tell your story and keep them abreast of what's happening in your company and your plans for your company. I'm going to say that's probably my key takeaway for today is know your story, share your story, educate your lenders on your plans and your industry and what you're doing.
And even in just being able to articulate, your ability to explain says a lot about your knowledge of the industry and the business you're in, and how you fit into that industry. And that goes to confidence,
Right.
right? If the lender knows that you know your numbers, you've researched it, you know the average price point, you know your differentiation, you've done your SWOT analysis, you know where you fit into the great. Well, even if you're a disruptor and innovator, you can say, hey, this is how the problem is currently being fixed. This is what I'm proposing, right? Like
Exactly.
completely out of the box. And the more you know it, the more you're able to explain it in the simplest way, is key to somebody understanding the risks that they're taking in you, right? In your ability to execute. And I think it was you that said in our past conversations, to have your product story and your service story, so that you're able to explain the development of it, how you came, without giving away your secret sauce, of course. But, just it goes to ownership, and it goes to confidence, and it goes to your knowledge of what you're doing and how you fit in, and what you're going to be able to do for them. So, needless to say, Rosanna did not pay me to say, get your books up to date.
I'm so proud that you wrote that.
Well, I've been caught on that, right? I've been caught on opportunities, and all of a sudden it's like, give us your latest financial statement. I was like, oh, darn it. Like, I have to tell you your worth of giving, like in 20 minutes. So, and I know it's difficult. I know. And I have an accounting background, right? And I know how difficult it is. And it's one of those things that if you can, outsource it, because you find that you're not having the time or the commitment or the, whatever, um, the self laceration inclination to do all your bookkeeping on time, it's worth the investment. It's
Yeah.
really, a few hours a month to get a bookkeeper, to bring your books up to date is worth it. It's some of the best investment you're going to do for your business.
Yeah, and I'm going to say in this day and age too, with technology, like even that gives us an opportunity to sort of automate some of the traditional manual bookkeeping functions. And that's actually become quite popular over the last few months. I've been working with a number of clients to transition them to cloud-based accounting solutions. And it's
Oh,
really helped automate their processes. There's various apps now that speak to the accounting software system, so you can just take a picture of an invoice and send it off, and the bookkeeping is going to be done for you. So there's a lot of things we can do in this day and age that sort of replaces the routine manual bookkeeping that I think most people dread.
absolutely, absolutely. And you know what? The invoicing, at least on a personal confession. The invoicing for me is always on time, right? Because I use my system for all of my invoicing, right? So that portion is always great and on time. It is the expense side of it that catches me every time. Is the entering of all the transactions. And
Yeah.
but like you said, there's apps and even your some of the new accounting apps even connect right to your bank, and there is ways to really automate it and make it easy on you. So let's see, create or update your business plan.
Yeah, I think that's a key component. I think sometimes people tend to see as creating a business plan as something I do once. I start my business, I develop my business plan, let's file it in the top drawer of my desk and never look at it again. Well, then really there's no point. Don't even bother wasting your time in preparing one, to be quite honest. A business plan is something that you need to evaluate, and sometimes things change along the way. Especially this past year, I'm sure there's lots of businesses that had to
Oh my
pivot.
God, yeah.
Lots of revisiting the business plan, recreating the business plan, and really keeping it up to date. And that business plan is really going to be a tool that you use as a business owner to speak to your lender, to share your story, to share your expectations of what you're looking to do and how you're looking to grow your business, and how the financing that you're asking for is going to be used. So
I
it
like
really
the
should be a
term
live document.
forecast. I think I like the term forecast better.
Yeah,
Because that we have a little bit of an ongoing joke right now in human resources that says, I would love to go back to all the people that 2 years ago were asked, where do you see yourself 5 years from now? Right. And understand that a plan and a forecast is just the best guesstimate, based on data, of course, on records, on extrapolating past performance, on things like that. Like and this is where the talking and the story is important, because somebody will say, how did you come up with your numbers? Right? You're forecasting doubling your income or tripling your income or going from 100,000 to 5 million in 3 years, right? It's like, that's wonderful. And I hope you succeed at it, right? But how did you come up with the numbers? Like, what's the story behind them? What are the assumptions, right?
Yeah.
For these. So again, I can now begin to tell you how having these conversations, and they are uncomfortable, and at times it feels like they put you on the defense. Or, I remember years back, many years ago, there used to be a CEO that never wanted to write down their inventory. They never wanted to take the write down, and he would always say to the auditor that used to come in, "Oh, we'll get rid of it," right? And one day the gentleman said, "You know what? I don't think you can." And the CEO was like, "What did you just say?" Right? And he's like, "Well, if you could get rid of it, I think you would have done it already." Right? And I could not, like, it was like, clear the room. Everybody just cleared the room. But you know what? It's true. Like, you gotta be able to, tell the story of what makes you think that, right? Like, is there some insight that that other people don't? Or is there a new partnership? Is there a new, I don't know, right? A repurposing of things. Like, this is why it's so important that before you go to actually have the conversation, because sometimes, I don't want to say you only get one shot, because that's kind of like stressful. You get many shots, or hopefully you get more than one shot, but you don't want to miss your shot so much that there's not a chance for a second conversation, right?
Yeah.
So that's why it's important to speak to your financial advisor and your money manager, your coach, your accountant, and have all these conversations. And they're going to ask you questions, and they're going to challenge you. If they're good, they're going to challenge you, right? They're not just going to take, "Oh, she says that, winter's coming, you're going to need a coat," right? And meanwhile, the business is in Phoenix, right? It's like, so, if they are acting in service of you, they are going to ask you tough questions. And they do feel, even, as much as Rosanna and I love each other, and as much as, we work together, I'm telling you, there's many times that she gives me an absolute run for my money. And, and you feel sheepish and you feel like a child. And it's like, I don't want to have to squall with her. Right? And, but, it needs to be done. Just remember, it needs to be done. And the final point, or one of the final points that we want to make, is watch your personal credit.
Yeah, when
Why
you're
do you? Yeah.
Yeah, I was just going to say with personal credit, I mean, especially if you're providing a personal guarantee against loans, lenders will look to you, your credit worthiness, and your credit scores and make a decision even just based on that. So if you don't have a good track record, that's not going to help the situation, that's for sure.
Yeah. And there's so many things being an entrepreneur, especially if you have exited corporate and you're a new entrepreneur or you've been a new entrepreneur at some point. There's so many lessons. My God, the humble pies the servings of humble pie keep arriving, right? And I started my business on my credit cards. I did not have because the business, just the way it was so unintentional that I became an entrepreneur, that I did not set out to say, oh, I'm going to start a business and here's my business plan. Like, it was more of those like, I think we're going to be in business and we need a website. Here's my credit card, right? And before I knew it, I had like maxed my personal credit card, growing the business, which sounds bad, but it's really no different than having gone to the bank. It would have been better going to the bank because it would have been better interest rate. But anyways, at some point, I had to reclassify that from consumer debt to a business debt that would have better interest rate, right? But I remember going into the bank and saying, I need funding, right, to offset these balances on my credit card. And I immediately felt that I had to say, these are all business expenses. Like, I did not just all of a sudden go shoe shopping and racked up 10 grand worth of, invoices, right? Because you feel, again, like you're feeling vulnerable when you're going in asking for these. But you got to remember, they want to lend you money, right? All of these institutions, they're in the business. That's how they make money. So they want to help you fix your need, right? So it's not like they're doing you a favor. Remember that, right? You are a stakeholder and you have a say and you have negotiation power. Just because they say, oh, this is what's going to be, you don't need to enter into an agreement on the spot. You go back again and follow up with your business manager and speak to your accountant and say, this is what they propose. Does that make sense? Right? And then you can go back and go back and forth. And as a woman, we need to, empowerment 101, learn when to say yes, when to say no, and what is it you need, and take it written down so that when you're in the meeting, you don't forget because you get excited or you get nervous or you get, sometimes 3 people will show up from the lending institution to the meeting, right? So it's like 3 people and you, right? And that's not to say that you cannot take your business advisor with you to the meeting if you need it, depending the scope of the transaction. So that has been an incredible show. I love speaking money with you. And I am going to say good luck and thank you. And always submit your questions. I love your messages. I get a lot of feedback on LinkedIn, and it takes me a little while to get back to everybody, but please forgive me. But I do read them and I do get back, and I do encourage you to let us know what you like, what didn't like. If you feel like leaving a comment below with other topics that you would like to see or contribute to the conversation, please do. So we're going to let Rosanna give our parting words and our walk away. And I thank everyone. Stay safe and keep on shining.
Thank you, Carolina. And I just leave you with one final comment. Just prepare, prepare, prepare. Walk into that meeting as if you're putting on a presentation. Be ready for whatever's thrown at you. Know your numbers. Have your documents in hand. Bring your financial statements. Bring your, any support you can, your business plans, your cash flow forecasts. All of these will help you share your story with your lenders and help them sort of see your business through your eyes. So be prepared. Thank you so much, everyone, for listening today.
Thank you. And we will see you Friday.
Empowering women on a global scale. This has been Powerful Women Today with Carolina Billings. To learn more about how you can join and transform your life and the lives of women everywhere with professional speaking, publishing, podcasting, and web TV, visit powerfulwomentoday.com. Remember to subscribe to this podcast on iTunes, YouTube, or wherever you like to